Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 4th of May. All right, now a little bit of disappointing yesterday's North American session. You can see here we had that break higher in the dollar index. It's broken back down, and if anything, really diffused that upward move that we had from the data at the end of last week. Now, what we've got coming into Tuesday was we had some more Euro and US data. Now, the US numbers were weak. A few of the Euro numbers were strong. And that's really, this is the catalyst behind the whole move. Or you could just isolate the US data and go, well, you know what? The numbers were weaker. It doesn't flow on from the recent US data, which gave the currencies a real big boost with dollar strength. Now, that's come back on us. Now, if I just show you the majors, just before I go into it, you can see these are the moves that we had, looking really good, looking for a retracement. All we needed was the data to match up, okay, strong US numbers to get the move. We didn't get the strong numbers. In fact, we got weaker numbers and we got slightly stronger Euro numbers, and that led to that 60, 70 point rally to the top side, and that's diffused most of the pairs, right? Hasn't fully gone away just yet, but you know, the dollar upward bias that would have come if those US manufacturing numbers, construction numbers, ISM manufacturing were stronger again. It just shows that every aspect of the economy was really banging away and leads to a stronger dollar. Now, you can see here on the dollar index, it looked extremely compelling. As I said, the price action is back to sort of fair ground here. It's really hasn't gone too far. Dollar Swiss, this is the pair I was thinking that hadn't moved out of all the pairs, started to go, US numbers came in weak, drifted straight back into the range. Now, we've still got a bit of a setup here of a strong dollar, but it lacks momentum now, right? It's really been diffused, and that's, you know, if anything, that just sucks, right? The dollar CAD drifting sideways, oil still sitting around 64.5 bucks. I don't think dollar CAD knows where it's going. If anything, the CAD fundamentals are still strong. Bank of Canada bringing forward their interest rate changing expectations 2 years to 22 instead of 24. That still puts an underlying bid tone on the CAD, right? CAD is strong because of that. So the rest of the pairs, it's, you know what, we're back to sort of like scratching your head. I still like the dollar up, but you know what, with the data not matching up, it becomes extremely less compelling. Now, the good thing is, right, that's the bad thing is the data was weak, goes against that current sort of rally in the dollar. The good news is this is a second day almost in a row or period where we've had key economic numbers impact the market, right? This is back to normal market conditions, and that's a really good thing. So what we can start to anticipate is trading with the macroeconomic numbers. Strong numbers, we're buying dollars, weak numbers, we're selling, right? If you come back and look at the US Treasuries, pretty mixed, okay? There's not much change, and you know, some are up, some are down. So there's no massive change to the yield. Equity markets are neutral as well, probably primarily because of the Treasury bonds not doing too much. So we've got a real situation where the dollar is moving on the macros. Now, right now here in Asia, US equity futures down, okay? The dollar block lower, the dollar up. It's a bit of a risk-off situation. Is that going to flow into the European, North American sessions? I'm not really sure at this point, but keep an eye on that. The other thing that you can be doing is come over and get not only just the US bonds and see what's going on there, have a look what's going across the bonds in general, right? The Kiwi bonds, okay, price is lower, yield is higher. Is that impacting the Kiwi? Not exactly. But have a look at this. Keep an eye on the global bonds. It can give you an idea of where those interest rate differentials are shifting, right? And if I could just go to the risk on, risk off page, you can come back through and see what's happening across all the other equity markets there as well. But right now, right, we are in a bit of a neutral phase. Now, in the Asian session, we saw that sort of rally, okay, with the dollar weakness, and now it's sort of just drifting lower. I know the risk-off profile does fit the picture here, but it's hard to say whether it's the macros or the equity markets at this point in control. Now, so coming back to like, what do we do from here? Like, what's the plan? Well, still the plan is to go through your charts, find out the pairs that have the best technical setups, of course, right? We've got the RBA coming out with their interest rate decision. Now, no change of rates expected, but we may get some sort of change in mantra, okay? The Bank of Canada could have been just the odd one out. The Fed came out and reiterated they are not in that position. I think the RBA will be similar, but if we did see something similar to what the Bank of Canada said, well, we could expect the Aussie dollar to scream to the top side. But once again, the economic numbers don't fit that picture just yet in Australia. So I think it's going to be a bit of a neutral event. Then come back down and start planning the rest of the week. Now, we do have more US numbers. Okay, so coming into this, you've got to be prepared. The US numbers are impacting. So let's keep a close eye on what's going on. If we see any significant variance here in the numbers, well, that's where we are going to get the dollar move, right? We had strong numbers, goes up. Some weak numbers, it goes back down. And that's why we're sort of trading sideways, pretty neutral. So we're waiting for the next phase of the numbers. Now, this is where the trends, like a lot of people say, where the trends come from? Well, it usually comes from the macros, right? You get strong numbers, the dollar goes up. You get the next leg of strong numbers, the dollar goes further, and the next leg of strong numbers, and the dollar really runs. That's where the trends come from. What we're getting, and this is unfortunate for us, we're getting the first leg of numbers strong, the next leg is weak, and it corrects that general move, right? So you can't do anything about it. All you can do is go back into your technicals, right? Come back through, start to redraw your trend lines around the current activity, right? And I've already shifted dollar Swiss, but you know what? With that move in the dollar, let me just get rid of that pen. I mean, we've got a new high here, and it would make sense to put that trend line there. So there's the dollar index. If I have a look at, as I said, I've already moved. The dollar Swiss trend line was here. There's that little blip above yesterday. It was looking great, and then it stalled. If anything, we're sort of still right around about that number. Dollar Swiss still looks like it wants to go to the top side. Dollar yen, not a hell of a lot at this point. The dollar Swiss has just widened itself out of touch. I'd like to see a bit of where those trend lines come from. Dollar caddy is just a dog's breakfast. And if anything, I mean, you've got a little bit of we're just focusing on this low here. So let me just show you where this is a bit of an error, I think. So you got this one starting point and the second trend line. Now, is that a trend line? It's probably very weak, right? And that's where I would come back in and say, make it like a light color, saying, well, that's the only support we've got, but it's very weak. I wouldn't actually be putting my house on, that's where there's loads of positions behind. If anything, what you could be doing is just going, well, what was the low? 120.11, right? You're doing the same thing by drawing that trend line. So just be aware, don't get too caught up in drawing too many trend lines that really don't fit the equation. Like, actually, this is a better example. If I have, look at sterling here. Now, it's gone down here, down to 138, so 40 points through a couple of times. Now, it's gone up 140 points. This is where I would move the trend line. This has got a lot of price action history back into it. So that makes complete sense to me to redraw that trend line. If I just widen that out a touch. And the Aussie and actually the Kiwis in the same sort of boat for that matter. So, and that just fills the picture, right? You're like, okay, what's going on? Well, there's not a lot going on with these pairs. As I said, we need momentum. We're not getting it from the local pairs, the Aussie or the Kiwi or sterling. There's a bit of data coming out from Euro, which was a little bit better. And that coincided with the weak US numbers, hence why Euro's a little bit higher, right? Makes complete sense. And when that makes sense, you got to get a bit of confidence in yourself and in the market around what's going on. Now, the news, not a lot going on just at the moment. Don't forget, we've got non-farm payrolls Friday. There's a lot of data coming out, durable goods, factory orders in this stage today. Wait for the numbers to come. Then the momentum comes in. That's when you get in. It's all about timing, right? So just hang in there. This is a little bit frustrating. We're not getting the connection in the numbers, but this happens throughout the course of the year. Don't get too caught up. As I said, bit of a risk-off profile at the moment. US equities down, dollar block down, US dollar up, right? So that's all we've got at the moment. We're waiting for the bigger picture, which is all these moves are emanating from the North American session. So you're best to possibly wait for that to kick in. All right, guys, have a good day. Hopefully that helps. Take it easy. Cheerio.